In high definition, this is News Channel 5, where the news comes first.
All right, well, thank you, Mike. And if you don't win the Powerball tonight, we are here to prepare you. Joining us now is Chad Slagle to talk about your money. Chad, new information on CD rates just came out, show they are at all-time lows. Put this into perspective for us. What does this mean, and what are the solutions for CD investors?
Well, very good question. Yes, this week actually the national average for a 5-year CD just dropped below 1%, and that's the first time that's ever happened. Of course, the Federal Reserve and Ben Bernanke and his team have come out many times and said interest rates are not going to go up at least until 2014. And where we find a lot of this problem is people who are retired or getting ready to retire that have had these CDs for years, and they use the income off of these CDs to live off of. So they're having a huge problem right now. A couple of places, depending on your risk tolerance and what kind of investor you are to get yields, would maybe be in some dividend-paying stocks, portfolio of dividend-paying stocks, some limited partnerships, maybe some real estate investment trusts, some REITs, or maybe even some high-grade bonds. The problem is to take somebody from that CD, that safe world, and to throw them into the stock market and that Wall Street world is a big change for them.
Sure.
So maybe somebody in that situation who's retired or getting ready to retire, they may want to look at fixed annuities or fixed annuities with an income rider, maybe a good option for them to help supplement that income that they're used to.
Okay, Chad, some good advice. Also in the news a lot lately, pensions and the troubles shared by individuals, states, and governments. So why is it so important for individuals to build their own private pension for retirement?
Well, that's a good question. That's something we see more and more today. General Motors, Ford, two big corporations coming out and trying to buy back or basically giving you a lump sum so they don't have to offer you a pension anymore. It takes the risk off of the company. You know, 20, 30 years ago, 80% of American workers had a defined benefit plan. In other words, when they retired, they had a monthly income coming in and they knew that money was going to last throughout the rest of their life. Today, though, only 30% of today's workers actually have a defined benefit plan. What they now have is what's called a defined contribution plan or a 401k, and they're using them as a pension plan. The problem is that's not what they were designed for. They were designed to supplement your pension plan. So that's a huge problem we see with a lot of people today, is finding enough money to live comfortably throughout the rest of their life. So what we recommend is sitting down with a good financial advisor, taking all of your things into consideration, your risk tolerance, your income needs, your lifestyle goals, and building your own private pension plan. Don't rely on a company or even the government to take care of you. Be proactive and build a game plan for yourself.
Okay, and if you win the Powerball tonight,
come see me.
Okay. Well, thank you so much, Chad, for being here. Ryan?
Thank you.